Question 1. Scenario-based. Mr. Garcia has recently purchased a 20-year level term life insurance policy and is considering adding a waiver of premium rider to his policy. 2 years into his policy, Mr. Garcia suffers a severe injury and is no longer able to work. Given these circumstances, how would the waiver of premium rider function if it were part of his policy? 8. The insurer will cancel the policy due to Mr. Garcia's inability to pay premiums and no death benefit will be available. B. Mr. Garcia will be required to pay the remaining premiums himself, but his death benefit will remain intact. C. The premiums on Mr. Garcia's policy will be waived as long as he can prove total disability, but the policy will remain in force. D. The insurer will refund the premiums paid so far and terminate the policy as the waiver of premium rider does not cover injuries. Answer C. Explanation. The waiver of premium rider ensures that if the policyholder becomes totally disabled as defined by the terms of the rider, the insurance company will waive future premium payments while keeping the policy in force. This allows the insured to retain coverage without making payments during the period of disability. Mr. Garcia, in this case, would not have to pay the remaining premiums after proving his total disability. This rider does not result in policy cancellation or refunds, but simply waives future premiums during the period of disability. Relevant rule. According to Delaware insurance regulations, riders like the waiver of premium must be fully disclosed and explained to the insured, including how they function in different situations. The Delaware Department of Insurance requires insurers to clearly define total disability and the terms under which the waiver applies. Question 2. Which of the following statements best describes the difference between level term insurance and decreasing term insurance? A. Level term insurance provides a level death benefit throughout the policy period, while decreasing term insurance reduces both the death benefit and premium over time. B. Level term insurance provides a decreasing death benefit over time, while decreasing term insurance keeps the death benefit constant but increases the premiums. C. Level term insurance provides a constant death benefit throughout the policy period, while decreasing term insurance provides a decreasing death benefit with level premiums. D. Both level term and decreasing term insurance provide constant premiums, but only decreasing term allows conversion to permanent insurance. Answer C. Explanation. Level term insurance maintains a constant death benefit and premium throughout the policy period. In contrast, decreasing term insurance maintains level premiums, but the death benefit decreases over time. Decreasing term insurance is typically used to cover financial obligations that reduce over time, such as mortgages or loans. The premiums do not decrease with the death benefit in decreasing term insurance. Relevant rule. Under Delaware insurance regulations, insurers are required to clearly disclose the structure of term insurance policies to policyholders, ensuring that they understand the distinction between level and decreasing term insurance options. The Delaware Department of Insurance mandates transparency in policy benefits and premium structures. Question 3. Under Delaware law, what happens if a policyholder misses a premium payment and the grace period has expired without payment? A. The policy terminates immediately and no benefits are payable. B. The policy lapses, but the policyholder may apply for reinstatement within a specified period by paying back premiums with interest. C. The insurer automatically reduces the coverage amount and extends the policy's term at a lower benefit. D. The death benefit is still payable, but the amount is reduced by the unpaid premiums. Answer B. Explanation. In Delaware, if a policyholder misses a premium payment and the grace period expires, the policy will lapse. However, most term life policies provide an option for reinstatement within a specified period, usually within 5 years, during which the policyholder can apply for reinstatement by paying all overdue premiums with interest. The insurer may also require evidence of insurability before reinstating the policy. Immediate termination occurs only if no action is taken within the reinstatement period. Relevant rule. Delaware law mandates a minimum grace period of 30 days for life insurance policies as per the Delaware Insurance Code, during which the policyholder can pay overdue premiums without the policy lapsing. After the grace period, the policyholder can apply for reinstatement provided the conditions outlined by the insurer are met. Question 4. What is the primary purpose of the contestable period in a term life insurance policy? A. To allow the insurer to increase premiums based on the insured's age. B. To provide a period during which the insurer can deny claims based on misrepresentation. C. To ensure that policyholders can change their beneficiaries without restrictions. D. To enable policyholders to convert their term policy to a permanent policy. Answer B. Explanation. The contestable period is a specific time frame, typically 2 years, during which the insurance company can investigate and deny claims if the insurer misrepresented information on the application. If a claim is made during this period, the insurer can review the application for inaccuracies and may refuse to pay out benefits based on misrepresentation. After this period, the insurer generally cannot contest the validity of the policy based on statements made in the application. Relevant rule. According to the Delaware Insurance Code, the contestable period is designed to protect insurers from fraudulent claims by allowing them to verify information and assess risk accurately before a claim is made. Question 5. Which of the following best describes the implications of a policyholder selecting an irrevocable beneficiary? A. The policyholder retains the right to change the beneficiary at any time without restrictions. B. The beneficiary can only be changed with the consent of the irrevocable beneficiary. C. The policyholder can receive the policy proceeds at any time. D. The insurer is obligated to pay benefits only after the policyholder's death. Answer B. Explanation. When a policyholder designates an irrevocable beneficiary, they cannot change this designation without the consent of the irrevocable beneficiary. This means the policyholder gives up their unilateral right to alter the beneficiary designation, ensuring that the designated beneficiary will receive the death benefit regardless of any changes the policyholder may wish to make in the future. Relevant rule. Under Delaware law, irrevocable beneficiaries must be explicitly stated in the policy, and changes require formal consent to protect the rights of the beneficiary, which ensures their legal entitlement to the policy proceeds. Question 6. Scenario-based. MS. Thompson, a 35-year-old policyholder, is considering surrendering her term life insurance policy to obtain a whole life policy. She is concerned about the financial implications of her decision. What should MS. Thompson consider before making this change? A. The potential for a lower death benefit with the whole life policy compared to her current term life policy. B. The surrender value she might receive from her term life policy and how it can be applied to the new policy. C. The long-term financial commitments associated with whole life insurance premiums compared to the lower premiums of term insurance. D. All of the above. Answer D. Explanation. MS. Thompson should evaluate all of the mentioned factors before surrendering her term policy. The death benefit of a whole life policy may be low compared to her current term policy, especially if she is transitioning from a larger term benefit to a whole life with potentially low premiums. Additionally, term policies typically do not have a cash surrender value, meaning she might not receive any financial benefit from surrendering it, while whole life policies require higher premiums over a longer period, affecting her financial commitments. Hence, all considerations are critical in making an informed decision. Relevant rule. Delaware Insurance Code emphasizes that policyholders should be aware of the implications of policy replacements, including financial assessments and benefits associated with the new policy, ensuring they make informed decisions. Question 7. Which factor is least likely to affect the risk classification and subsequent premium determination for a term life insurance policy? A. The insured's occupation and associated risks. B. The insured's health history, including past medical conditions. C. The insured's annual income and financial status. D. The insured's lifestyle choices, such as smoking or drinking. Answer C. Explanation. While the insured's occupation, health history, and lifestyle choices significantly influence risk classification and premium rates, annual income and financial status are generally not direct factors in determining premiums. Underwriting focuses on the likelihood of claims based on health and lifestyle rather than financial factors. Therefore, an individual's income may be less relevant when evaluating the risk associated with providing coverage. Relevant rule. According to the underwriting guidelines established by the Delaware Department of Insurance, insurers are required to evaluate risk primarily based on health, lifestyle, and occupational hazards, emphasizing that financial status does not directly influence risk classification. Question 8. Which of the following statements is true regarding the taxation of life insurance benefits in Delaware? A. Death benefits from a life insurance policy are taxable as income to the beneficiary. B. Policyholders can deduct the premiums paid for life insurance on their state income tax returns. C. Life insurance proceeds are generally not subject to estate tax if the policy is owned by the insured. D. The cash value accumulation in a whole life policy is exempt from taxation while the policyholder is a living. Answer D. Explanation. The cash value accumulation within a whole life insurance policy is generally exempt from taxation while the policyholder is living. However, upon withdrawal or policy surrender, any gains may be subject to taxation. Death benefits are typically not taxable as income to beneficiaries, but may be included in the taxable estate if the policy is owned by the insured at the time of death. Therefore, options A and B are incorrect, while option C is conditional based on ownership. Relevant rule. Under both federal tax law and Delaware state tax regulations, life insurance proceeds paid upon the death of the insured are usually exempt from income taxation for the beneficiaries. The Delaware Department of Revenue stipulates these taxation rules, reinforcing that life insurance cash values are not taxed while the policy remains in force. Question 9. In Delaware, what are the requirements for an insurance agent when replacing an existing term life insurance policy with a new one? A. The agent must ensure the new policy provides better coverage and lower premiums. B. The agent is required to obtain the existing policyholder's consent for the replacement. C. The agent must disclose all information related to the old policy to the new insurer. D. The agent must submit a detailed report to the Delaware Department of Insurance regarding the replacement. Answer. B. Explanation. When replacing an existing term life insurance policy, Delaware regulations require agents to obtain the policyholder's consent. This means the agent must provide clear disclosures about the implications of replacing the policy, including how it affects coverage and benefits. Although agents should also advise on the benefits and drawbacks of the replacement, obtaining consent is a key legal requirement to ensure the policyholder is fully informed. Relevant rule. The Delaware Code of Ethics for Insurance Agents mandates that agents provide full disclosure and obtain consent when recommending a replacement of life insurance policies, ensuring adherence to ethical selling practices and client suitability standards. Question 10. Which provision in a term life insurance policy allows the policyholder to receive a portion of the death benefit while still alive under specific conditions? A. Accidental death benefit rider. B. Conversion privilege. C. Accelerated death benefit rider. D. Waiver of premium rider. Answer. C. Explanation. The accelerated death benefit rider allows the policyholder to access a portion of the death benefit while still alive, typically in cases of terminal illness or severe medical conditions. This rider is particularly beneficial for policyholders facing significant medical expenses, enabling them to utilize funds from their life insurance policy to help manage costs. Other options listed do not offer this provision. For instance, the waiver of premium rider merely waives premiums during periods of disability without providing access to death benefits. Relevant rule. Delaware insurance regulations stipulate that if an accelerated death benefit is offered, it must be clearly disclosed to the policyholder, including the conditions under which the benefit can be accessed and the impact on the total death benefit. Question 11. Which of the following statements is true regarding the conversion privilege in a term life insurance policy? A. It allows the policyholder to convert the term policy into a universal life policy without providing evidence of insurability. B. It guarantees a lower premium for the converted policy than the original term policy. C. The conversion must occur within the first year of the term policy. D. The policyholder can only convert to a whole life policy. Answer. A. Explanation. The conversion privilege in a term life insurance policy allows the policyholder to convert their term policy into a permanent policy, such as whole or universal life, without providing evidence of insurability. This feature is beneficial for individuals who may have developed health issues during the term that could make it difficult to obtain new coverage. Relevant rule. According to Delaware law, insurance policies must include a conversion option that complies with the standards set forth in the state insurance code, ensuring policyholders have the right to convert their term coverage. Question 12. What happens to a term life insurance policy when the policyholder stops paying premiums after the grace period? A. The policy automatically converts to a whole life policy. B. The policy is considered lapsed and coverage ceases. C. The policyholder can reinstate the policy without any conditions. D. The policy remains in force until the end of the current term. Answer. B. Explanation. If a policyholder stops paying premiums and the grace period expires, the term life insurance policy is considered lapsed, meaning coverage ceases. The policyholder loses their death benefit and the insurer is no longer obligated to pay out upon the insured's death. Relevant rule. Delaware insurance regulations stipulate that insurers must provide a grace period during which policyholders can make late payments without losing coverage, but failure to pay within this time frame results in the policy lapsing. Question 13. In Delaware, which type of life insurance policy typically has the highest initial premiums? A. Term life insurance. B. Whole life insurance. C. Universal life insurance. D. Variable life insurance. Answer. B. Explanation. Whole life insurance typically has the highest initial premiums compared to other types of life insurance policies. This is because whole life policies provide guaranteed death benefits and cash value accumulation, which requires higher premium payments to fund the policy's guarantees. Relevant rule. Delaware insurance regulations require clear disclosures of premium structures and benefits associated with different types of life insurance policies, allowing consumers to make informed decisions based on their financial capabilities. Question 14. Which of the following is a feature of a level term life insurance policy? A. The death benefit decreases over time. B. Premiums are adjustable based on the insured's age. C. The death benefit remains constant throughout the term. D. The policy accumulates cash value over time. Answer. C. Explanation. In a level term life insurance policy, the death benefit remains constant throughout the duration of the term, ensuring that beneficiaries receive the same amount regardless of when the insured passes away during that period. This feature provides predictability for both the policyholder and the beneficiaries. Relevant rule. Delaware insurance laws require that the terms and conditions of level term policies be clearly stated in the policy documents, ensuring transparency in benefits provided. Question 15. What is the typical duration of a standard term life insurance policy? A. 1 year. B. 10 years. C. 20 years. D. It can vary, commonly ranging from 1 to 30 years. Answer. D. Explanation. The duration of a standard term life insurance policy can vary significantly, typically ranging from 1 to 30 years, depending on the insurer and the policyholder's needs. Some policies may offer shorter or longer terms, allowing flexibility for the policyholder based on their coverage requirements. Relevant rule. Delaware insurance regulations stipulate that insurers must disclose the available term lengths for life insurance policies, allowing consumers to choose the coverage duration that best fits their financial planning. Question 16. Which rider in a term life insurance policy allows the policyholder to purchase additional coverage at predetermined intervals without providing evidence of insurability? A. Waiver of premium rider. B. Accidental death benefit rider. C. Guaranteed insurability rider. D. Accelerated death benefit rider. Answer. C. Explanation. The guaranteed insurability rider allows policyholders to purchase additional coverage at specified intervals or life events, e.g., marriage, childbirth, without needing to provide evidence of insurability. This is particularly beneficial for individuals who anticipate needing increased coverage in the future. Relevant rule. Under Delaware insurance regulations, insurers must clearly outline the conditions under which guaranteed insurability is available, ensuring policyholders understand their options for increasing coverage. Question 17. In Delaware, if a policyholder misrepresents their health status on an application for a term life insurance policy, what is the consequence if a claim is made within the contestable period? A. The insurer must pay the claim in full regardless of the misrepresentation. B. The insurer can deny the claim based on the misrepresentation. C. The policyholder will receive a reduced benefit amount. D. The insurer can only deny the claim if the misrepresentation was intentional. Answer. B. Explanation. If a policyholder misrepresents their health status on their application for a term life insurance policy, the insurer can deny the claim if it occurs within the contestable period, usually 2 years from the policy start date. This provision protects insurers against fraud and ensures accurate risk assessment. Relevant rule. Delaware law allows insurers to contest claims during the contestable period based on misrepresentations, reinforcing the importance of accurate and truthful disclosure in applications. Question 18. Which of the following statements regarding the death benefit in a term life insurance policy is true? A. The death benefit is guaranteed to increase annually. B. The death benefit is paid out only if the insured dies during the policy term. C. The death benefit can be accessed by the policyholder while they are alive. D. The death benefit is only payable to the estate of the policyholder. Answer. B. Explanation. The death benefit in a term life insurance policy is paid out only if the insured dies during the specified policy term. If the policyholder survives the term, no benefit is paid, and the policy generally has no cash value. Relevant rule. According to Delaware insurance regulations, the terms surrounding death benefits must be clearly defined in the policy, ensuring consumers understand the coverage they are purchasing. Question 19. What is the primary reason for the existence of the free look period in life insurance policies? A. To allow the insurer to assess the risk before binding coverage. B. To give the policyholder a chance to review the policy and return it if not satisfied. C. To provide policyholders with an option to adjust their coverage without penalties. D. To guarantee the policyholder a premium refund at the end of the term. Answer: B. Explanation. The free look period allows policyholders to review their life insurance policy after purchase and return it for a full refund of premiums if they are not satisfied, typically within 10 to 30 days, depending on state regulations. This feature ensures that policyholders have the opportunity to reconsider their decision without financial penalties. Relevant rule: Delaware law mandates a free look provision in life insurance policies, enhancing consumer protection and ensuring transparency in the purchasing process. Question 20. Which factor would most likely result in a higher premium for a term life insurance policy? A. Selecting a shorter coverage term. B. The insured's advanced age at the time of application. C. Choosing to make annual premium payments instead of monthly payments. D. Opting for a basic coverage option with no additional riders. Answer: B. Explanation. The insured's advanced age at the time of application typically results in a higher premium for a term life insurance policy because older individuals are statistically at higher risk for mortality. Insurers adjust premiums based on the applicant's age, health, and lifestyle factors to reflect the increased risk associated with older age. Relevant rule: Delaware insurance regulations require that age and health factors be considered in premium calculations, ensuring that consumers understand how these elements affect their insurance costs. Question 21. Which of the following best describes a renewable term life insurance policy? A. The policy provides coverage for a specified term and can be renewed for the same period without a new application. B. The premiums decrease with each renewal term. C. The coverage automatically converts to whole life insurance at the end of the term. D. The policyholder must provide evidence of insurability at each renewal. Answer: A. Explanation. A renewable term life insurance policy allows the policyholder to renew their coverage for the same term without needing to provide evidence of insurability, even if their health status has changed. This feature offers convenience and continued protection. Relevant rule: Delaware insurance laws mandate that insurers disclose the terms of renewability in the policy documents, ensuring consumers are aware of their options for extending coverage. Question 22. What is the purpose of a waiver of premium rider in a term life insurance policy? A. To ensure that premiums remain fixed throughout the policy's term. B. To provide for the payment of premiums in the event the policyholder becomes disabled. C. To allow the policyholder to withdraw cash value from the policy. D. To increase the death benefit amount automatically over time. Answer: B. Explanation. A waiver of premium rider provides that if the policyholder becomes disabled, the insurer will waive premium payments, ensuring that coverage continues without requiring additional payments during the period of disability. Relevant rule: In Delaware, such riders must be clearly explained in policy documents outlining the conditions under which premiums will be waived. Question 23. If a policyholder dies by suicide within the first 2 years of the policy, what is the typical outcome according to Delaware regulations? A. The policy will pay the full death benefit. B. The policy will pay a reduced benefit amount. C. The policy will not pay any death benefit and premiums will be refunded. D. The policyholder's estate will receive double the premiums paid. Answer: C. Explanation. Most term life insurance policies contain a suicide clause that states if the insured dies by suicide within the first 2 years of the policy, the insurer will not pay the death benefit but may refund the premiums paid. This clause is in place to prevent fraud and abuse of the policy. Relevant rule: Delaware law requires that insurers inform policyholders of the suicide clause during the application process, ensuring transparency about policy limitations. Question 24. What does term to age 65 mean in a term life insurance policy? A. Coverage lasts until the policyholder turns 65, at which point the policy terminates. B. The death benefit decreases each year until the policyholder turns 65. C. The premiums are fixed until the policyholder reaches 65. D. The policy automatically converts to a whole life policy at age 65. Answer A. Explanation. Term to age 65 means that the coverage provided by the policy will remain in effect until the policyholder reaches age 65. After that age, the policy typically terminates unless there are provisions for renewal or conversion. Relevant rule. In Delaware, term life insurance policies that extend to specific ages must clearly state the terms and conditions regarding coverage duration. Question 25. Which of the following is true regarding the cash value in a term life insurance policy? A. Term life insurance policies accumulate cash value over time. B. The cash value can be accessed by the policyholder while alive. C. Term life insurance policies do not accumulate cash value. D. The cash value is guaranteed to be at least equal to the total premiums paid. Answer C. Explanation. Term life insurance policies do not accumulate cash value. They are designed solely to provide a death benefit for a specific term and do not have any savings or investment component like permanent life insurance policies do. Relevant rule. Delaware regulations stipulate that the characteristics of life insurance policies, including whether or not they accumulate cash value, must be clearly defined in the policy documentation. Question 26. What is the main advantage of having a level premium in a term life insurance policy? A. The premium decreases with age. B. The premium is fixed for the entire term, making budgeting easier. C. The policyholder can choose to skip premium payments. D. The premium is based on the policyholder's current health status. Answer B. Explanation. A level premium means that the premium amount remains fixed throughout the term of the policy. This stability allows policyholders to plan their finances more effectively since they know exactly how much they will pay each year. A relevant rule. Delaware insurance regulations require that insurers clearly communicate premium structures, including whether premiums are level or adjustable, to policyholders. Question 27. What is the significance of the contestable period of a life insurance policy? A. It is the time during which the policyholder can cancel the policy for a full refund. B. It is the period in which the insurer can deny a claim based on misrepresentation or fraud. C. It is the time limit for the insurer to investigate a claim after the insured's death. D. It is the period during which the policyholder can increase their coverage without additional underwriting. Answer B. Explanation. The contestable period is typically the first 2 years of the policy during which the insurer can investigate and deny claims based on misrepresentations made in the application. This protects insurers from fraudulent claims and ensures accurate risk assessment. Relevant rule. Delaware law mandates that insurers inform policyholders about the contestable period, ensuring they understand the implications for claims during this time. Question 20. In Delaware, what is the typical requirement for a policyholder to reinstate a lapsed term life insurance policy? A. The policyholder must pay the full amount of premiums due. B. The policyholder must provide evidence of insurability. C. The policyholder must submit a new application for coverage. D. The policyholder must complete a medical exam. Answer A. Explanation. To reinstate a lapsed term life insurance policy, the policyholder typically must pay all overdue premiums within a specified period and may have to pay any additional interest charges. Depending on the insurer's policy, evidence of insurability might not be required. Relevant rule. Delaware insurance regulations dictate the terms and conditions under which reinstatement of lapsed policies can occur, ensuring policyholders have clear guidelines for regaining coverage. Question 29. Which statement about beneficiaries in a term life insurance policy is accurate? A. Only individuals can be named as beneficiaries, organizations cannot be named. B. The policyholder can change the beneficiary designation at any time, provided the policy allows it. C. Once a beneficiary is designated, it cannot be changed under any circumstances. D. All beneficiaries must be related to the policyholder by blood. Answer B. Explanation. The policyholder can generally change the beneficiary designation at any time as long as the policy allows for such changes. This flexibility is important for ensuring that the death benefit goes to the intended recipient as life circumstances change. Relevant rule. Delaware law supports the policyholder's right to designate and change beneficiaries, provided proper procedures are followed. Question 30. Scenario-based question. John purchased a 20-year term life insurance policy at age 40. After 10 years, he decides to switch to a whole life policy. What options does John typically have regarding his existing term policy? A. He must cancel the term policy without any benefits. B. He can convert the term policy to a whole life policy if it includes a conversion option. C. He can keep both policies active simultaneously. D. He can only switch if he pays additional premiums for the term policy. Answer: B. Explanation. If John's term policy includes a conversion option, he could convert it to a whole life policy before the term expires without providing evidence of insurability. This option is valuable as it allows him to obtain permanent coverage based on his initial health status. Relevant rule: Delaware regulations require that insurers provide clear information about conversion options in term life insurance policies, allowing policyholders to make informed decisions regarding their coverage.